What is going on YouTube? It's Sankey, we're back with another one. Alright guys, so I'm coming your way with a couple of penny stock plays. Now you guys know how we view the penny stocks as a way to blow off some steam in the market. Throw a couple dollars here and there at them, make the return, take profit and keep it moving. Got to remember to keep your portfolios well balanced, well diversified, keep the majority of your funds in our growth place. That's going to build you guys wealth over time. Now before I get the show on the road, I'm going to need you guys to hit the like button for me, and if you're new, hit that subscribe button, join the journey. Now before we jump into our first play, got to do some housekeeping on one of our existing penny stock plays in the portfolio. Up on screen, that's IQST. This is one of our channel penny stock plays. We know they're involved in fintech, telecoms. They've even got their blockchain asset and they're involved in EV as well. So well diversified in what they do. And you guys know they've served us well so far. So as you can see, currently standing over 2,000 shares strong in this one, return over 80%. Now this year, I want you guys all to become experts at taking profits from your plays. I want you guys to elevate to that mastery status of knowing when to sell out of the plays. I don't want any of you guys bag holding while the other investors have sold out. And you guys know over here we have our 3 checkpoints to take profits. That's when you hit 25% return, when you hit 50% return, and when you hit 100%. And if you're like me and you've hit some of those checkpoints in IQST, I'm going to need you guys to do 2 things for me. The first is to take profit out of this play. A good amount to take is 25% of your holding. So I'm holding 2,000 shares in this one, so I'm going to take out 250 shares. The second thing I'm going to need you guys to do is set your stop limits on this play. Because you guys know over here, we're always thinking ahead. And we know the market's volatile right now. Even some of the best plays, some of the most undervalued plays out there have received a smackdown from the market. So I don't want you guys losing any of your profits in IQST. So if there's any volatility in the market, if any downward pressures comes on IQST, that stop limit is going to allow you guys to cash out automatically and take the profit. So I'm going to show you guys what we're going to do. Hit sell, head over to stop limit. For the number of shares, select 50% of your holding. So in my case, that's 1,000 shares. Now for the stop price, select $1.20. Remember, the stop price is where it's going to start the selling process. I've selected $1.20 because it gives us a 15% buffer. So if that stop price drops down 15%, it's going to trigger the sell process. And for the limit price, we select $1.10. Now remember, the limit price is the lowest price we're going to receive. The reason why we selected $1.10 is because we need to give ourselves a buffer between the stop price and the limit price. If the limit price is too close to the stop limit might not work. It might skip over it. And we don't want our limit price too low for obvious reasons. So it's that trade-off there. Now also remember to select good till cancelled, because we want this stop limit to be effective not only tomorrow, but ongoing as there's market volatility. Up on screen, that's IDEX. Now they're diversified in what they do. They have their EV division and their fintech division. Within their EV division, they assist the fleet operators transition over from gas vehicles to electric by providing the vehicles, sorting out the financing, and also providing the charging as well. Now, last business update I gave you guys, I said they're winning larger and larger orders, and one of them was a 2,000 vehicle order from BYD for ride-hailing vehicles. Also, they had good December deliveries. It was over 100% versus November month. Now, if we look at the charts, we can see this is a very volatile play, big spikes in that stock price, and this is a good candidate to buy low, sell high, and repeat. So as I said to you guys, I want you to be experts at selling out of these plays. So as you can see, they peaked up in November, hit around $3, and they peaked, then they dipped to $2 in December, and then they peaked again in February to over $5. They've now dipped, and it's opening up a good entry point for us to get into this play before the next run up in that stock price. Now you guys would have heard me talk about tailwinds. Those are things going on in the business right now that give them good momentum and push that stock price up. Now IDEX, they've got good tailwinds behind them. They're growing rapidly through acquisitions. You guys know I like those plays that go out there, make those acquisitions. And I mentioned to you about the acquisition of Wave. That's the wireless charging company for heavy and medium vehicles. And also the acquisition of Timios that they did in their fintech division. And this gives all participants in a real estate transaction better access to data. And this company is flying right now. So if we look at the charts, IDEX currently standing at $3.19. I'm going to tell you guys how we're going to crush this play. Strike price on this one is under $3.20. Catch them under $3.20. This gives us a good entry point before the run up in that stock. You guys know exactly what we're going to do. We hit 25% return, 50% and 100% return in this play. Now, I also mentioned to you about we're always looking for these penny stock plays that can graduate to long-term plays, like a Neo, like a plug. Now, IDEX, they're far from that, but that doesn't stop us applying the strategy and making good returns from this one. Up on screen, that's American Resources, ticker symbol AREC. Now it's good to have this play featured back on the channel. They supply raw materials to the infrastructure market. They also develop carbon, rare earths, battery materials, things of that nature. So as you can see, we're still holding our 200 shares strong in this one, return over 150%. Now, they've got some good things in the pipeline. 3 of their projects should start opening up and start generating cash flow for them this year. They're also investing heavily into the rare earth side of their business. They've recently come out and told us that they've acquired a few technology patents related to rare earths. Also, they've invested into a SPAC called American Acquisition Opportunities. They're focused on renewable energy and clean energy assets. Now, if this SPAC performs well, this should directly translate to a good share price increase for American Resources. Now, if we look at the charts, currently standing at $5.26. This is a different play to an IDEX. IDEX, they're a buy low, sell high and repeat. With American Resources, this is a buy, a hold, catch the dip and hold. They're not as volatile in their movement as an IDEX play. So it's different strategies for different plays. Now, strike price on this one, under $5.20. Catch them under $5.20. I'm going to load up on this play. Now, as you can see, my average in this play is under $2. So if you're like me and you caught this one early, what we're going to do is dollar cost average up on this play. Some plays we dollar cost average down, some plays up. Now, I'm looking to add at least another 100 shares to American Resources. Not only are they working on diverse projects and they've got different streams to their business, but their rare earths piece is interesting because it's used in high technology, it's used in EV, and as these industries grow, that demand for rare earths is going to grow as well, and it's going to benefit American Resources. And it's only a matter of time before they're retesting their all-time highs of over $7. Now I'm going to give you guys 2 penny stock plays which I expect to double up by the end of the year. First up, that's HITIF, ticker symbol HITIF. Now what you guys need to know about this play is they're closing in on their acquisition of Smoke Cartel. This expands them into the accessory side of the industry. And going forward, I expect them to make more acquisitions, grow their product offering. They've also been cleaning up their balance sheet, converting over a load of debt, and they've done some bought deals as well. This gives them the financial firepower they need to expand. Also mentioned, they open up their 70th retail outlet. Going forward, I expect much of the same. I expect 71, 72 and on. Also, they're going to benefit from any regulatory changes we see in the industry. So this is a play I want you guys to keep on your radar. Strike price on this one is under 60 cents. Catch them under 60 cents. It's time to load up on this one. Now, they are coming out with their earnings tomorrow after markets, and I expect them to outperform. Up on screen, that's Aurora Mobile, ticker symbol JG. And we're not going to spend too long on this one. They're a mobile data company that uses the artificial intelligence to help companies better understand their customer needs. Now, we like this play because they make a lot of partnerships. I told you about the partnership they made with an EV company, the partnership they made with a TikTok rival called Kuaishou, and I expect more of the same as we progress through the year. Now, currently standing at $5.41. They're in the buy zone. My entry price on this one is $5.50. Catch them under that. Load up on this play. Alright guys, been rocking with this channel. You know what time it is. This question comes from Breeze Agent. Says, why do Tesla and NIO have almost identical growth and decline? Now this is a great question, so thank you for sending it in. We know the market's volatile right now. We've seen a sell-off in the market, and this is caused by rising bond yields and fears that inflation is going to increase. Now when we see that affects the stock market, so investors start taking out money. And what they do is they try and balance their risk. So they start targeting those plays that have performed very well. And industries that have performed well over the last 12 months have been industries like tech, EV and clean energy. So if we take a Tesla, for example, had a great performance 2020. So you have a lot of investors locking in profits and taking money out of the market. Now, this is a classic case of follow the leader pricing. That's what I like to call it. So we know Tesla is a dominant force in the EV space, one of the leaders. So you're going to have peers in the industry mimicking that price movement like a NIO. So if Tesla comes down, and NIO is going to come down too. Now I'll let you guys know we can use this price correlation within an industry to our advantage as investors. Now I'll introduce you guys to the term sympathy play. Now sympathy play is a play that benefits of another play that's received a catalyst. And just by a bit of forward thinking over here, a lot of us managed to benefit off these sympathy plays. I'm going to give you guys a recent example. As Bitcoin started to increase, a lot of crypto focused assets also started to increase. But within the industry, there were still crypto assets that were not moving. It was only a matter of time before they started moving up in tandem with the rest of the industry. Now, a lot of us managed to jump in on these plays, ride them up, lock in good profits. It's as easy as that. Now, I've got to quickly touch on portfolio diversification. Now, you guys have seen firsthand a lot of tech plays come down, clean energy down, EV down. That's the importance of keeping your portfolio well diversified. You guys know over here we're also in cloud, we're also in gaming, gambling and various other industries. So do ensure you keep your portfolios well diversified. This is going to give you guys that risk protection from various fluctuations in the market. Alright guys, that wraps things up. Do hit the like button for me, and if you're new, hit the subscribe button. As we close out the weekend and head into a fresh brand new week in the stock market, one thing left to say, let's go!